morning, everyone. Welcome back. We'll be continuing with Mr. Spanos and Mr. DeAscendis. I want to let you gentlemen remind you you're still under oath. So, Mr. Witt.
Pardon me for interrupting, but I have a preliminary matter I wanted to raise with you as chairman that you can be considering. I'm Richard Witt from the Witt Law Firm for South Carolina Department of Consumer Affairs. We had an order for a date certain today for our 3 witnesses, but in looking ahead to the day, we'll have to finish this panel and cross, and then the next witness is going to take up a considerable amount of time on cross. Then you have lunch. Then you have a commission meeting, and then I think you have another hard stop towards 4:30 this afternoon. The problem, of course, that the Consumer Advocate has is the same one that ORS has. Our witnesses are funded by the state of South Carolina tax dollars, and we only had them available for today, and because we had a date certain, I think 2 of them have flights out this afternoon, and if they're not finished today, it's going to cause considerable expense to the Consumer Advocate. So we were proposing that we put up our 3 witnesses after this panel concludes before the company's last witness.
May I comment on that?
Yes, ma'am. You need to get to a microphone, please.
I'm Laura Valtorta from 40 Love Point. We have 2 witnesses that are supposed to come after Mr. DeStefano, and they're going to be very short. That's going to be 30 minutes tops.
Okay, thank you. Mr. Ellerby.
Mr. Chairman, I was just going to say that we don't have any objection to Mr. Witt's request.
Thank you.
Okay. We will, once we finish with these folks, we'll revisit that and try to get this worked out. So we'll get everybody in here.
We appreciate your consideration.
Right. Thank you, sir.
I apologize if it inconveniences anybody, but we're in a kind of a bind on these witnesses.
Understand. We want to get everybody heard.
Thank you.
Thank you, sir. Okay, Mr. Kendry, did you get finished on yesterday with your cross-examination? Ms. Valtorta, cross for these gentlemen.
I do not have anything.
Thank you, ma'am. Consumer Affairs.
Mr. Chairman. I am Carrie Gruby-Leibarker, the Administrator and Consumer Advocate over the Department of Consumer Affairs. Good morning, gentlemen.
Good morning.
My questions today are going to be focused on your testimony, Mr. DeAscendis. I'd like to first go to your testimony regarding non-price regulated proxy group selection criteria. So referring to your direct testimony on page 32, lines 12 through 14, you state non-price regulated firms operating in the competitive marketplace make an excellent proxy if they are comparable in total risk to utility proxy group being used to estimate the cost of common equity, correct?
That's right.
Starting on line 17 of page 32 of your direct testimony, you start to explain how you selected your non-price regulated proxy group, correct?
That's right.
On page 33, lines 3 through 10 of your direct testimony, you list the 4 criteria you use to select the companies in your non-price regulated proxy group, correct?
That's right.
Schedule DWD-6 shows a list of 14 companies in your non-price regulated proxy group, correct? And I'll put that up here on the Elmo if I can.
That's right.
Elmo, please. Thank you. And you'll have to, excuse me, my allergies are getting the best of me this morning as well. I'll try it. So this is page 3 of Schedule DWD 6. But to confirm, on page 32, line 22, and page 33, line 16 of your direct testimony, you state there are 11 companies in this proxy group, but in fact there are 14, correct?
Sorry about that.
Just wanted to verify. So if we apply the criteria that you list on page 33, those 4 items, we will obtain the 14 companies you show on this schedule DWD 6, correct?
That's right.
So on page 71, line 14 of your rebuttal testimony, you state that you received all the data used to select your non-price regulated proxy group, quote, directly from Value Line, correct?
Hold on for a second. You said
Sure.
what page?
Page 71, line 14 of rebuttal testimony.
Yes.
Okay, so you obtained the numbers in items 2, 3, and 4, the unadjusted beta, residual standard error of the regression, and standard deviation of beta directly from Value Line.
That's right.
So would it surprise you to know that when searching for the term standard error within the entire Value Line website, whether logged in or with a subscription, it yields no results?
No, it doesn't. As I plainly state in DWD 6, it says source of information, Value Line proprietary database. Where is it? Page 2 of 3 and page 3 of 3. Value Line proprietary database. We purchase it from Value Line. And it's not included in the subscription to Value Line. It's not included in any type of, on any of the Value Line sheets.
So is there any manner for other experts to be able to access the data?
They could ask for it and I'd give it to them.
Is any information regarding the underlying data that you have in your proprietary database included in your testimony?
No, and they don't give me the data behind it. They just give me the raw numbers. It's not unlike what Mr. Rothschild did with his beta calculations. All of them were hard-coded, and I couldn't figure a lot of the data from his. So a lot of this stuff comes hard-coded, and the witnesses have to deal with what the vagaries of the data that they receive from the opposing witnesses.
So are you familiar with Value Line's formula for the adjustment of beta?
Yes.
And did you use the Value Line formula?
No, I took it from Value Line.
So you didn't use the Value Line formula, you got the information direct?
Right. You said that you're familiar with it. I said yes. And then you said, did you use it? I said no.
Okay. Did you perform a regression analysis?
No, like I said, all of the data that I got was from Value Line's proprietary database.
When you applied the first 2 of your 4 criteria, do you recall how many companies were on your list?
No.
Would it surprise you that when Mr. Rothschild did so, he obtained a list of approximately 1,200 companies?
I don't know how he could get there because he didn't have the data. So we could be working from 2 different data sets. Like I said, I ran those screens and ended up with 14.
Do you agree that in order to be able to compare the betas of 2 companies, it is important that they be calculated using the same methodology, including the same time period, the same return interval, the same return frequency, and the same index?
Say that again.
Do you agree that in order to be able to compare the betas of two companies, it's important that they be calculated using the same methodology, including the same time period, the same return interval, the same return frequency, and the same index?
Time interval is a little different. Like for if you're in an electric case, right? If you're using the value line sheets, they get released every 3 months, and the Eastern, Western, and Central are from different periods. So even though one could be 1 or 2 weeks later than the other one, they're still comparable. Now, comparing betas from last year to this year would be an issue, but a couple weeks I don't think is an issue.
Going now towards standard deviation, would you agree that the term standard deviation can refer to at least 2 or 3 different concepts when applied to a list of the betas of a group of companies based on a regression of their stock prices versus an index?
None of this matters to at least the selection of my companies, because it was taken from a proprietary database.
So regarding the column 4, the standard deviation of beta in schedule DWD6, it was solely calculated through that proprietary database, not through any efforts or work papers of your own.
No, it's given, and it's not like Value Line, some fly-by-night company. They're an investor influencing publication. So any way to question these numbers, they're from Value Line. I didn't touch them at all. So no subjectivity on my part was taken in calculating any of these numbers and 1, 2, 3, and 4.
I think the issue that we have is the sake of transparency and clarity, that it would have been helpful to be able for our experts to look at the information that you had to determine the credibility of the numbers. Do you think that would have provided clarity and transparency if we had some more information in your testimony regarding that?
I think that might be what Discovery's for.
So since you listed the standard deviation of beta value for each company in Schedule DWD6, I'm assuming this does not refer to the standard deviation of the unadjusted betas of the entire proxy group. Is that correct?
That's right.
So do the values in the column labeled standard deviation of beta correspond to the standard deviation of historical returns provided by Value Line for historical periods of 3, 5, or 10 years, just like the betas they provide?
I don't know.
So because the information came directly from Value Line, you do not have a formula for that column, is that correct?
Everything was hard-coded as values. And if you'd like a late filed exhibit, I'll be happy to give it to you.
Thank you. Just 1 moment, making sure we go forward and correct. Don't want to have you repeat anything you've already said.
It's okay.
When you say 95.5% of the distribution in page 1 of Schedule DWD6, exactly which distribution are you referring to?
It's just a mathematical fact that 2 standard deviations cover 95.5% of the population.
Can you please explain why you chose 2 standard deviations on either side of the mean?
Just to have a representative range of the average of the proxy group.
So does this come back to the concept of sampling error for each company, since you can talk about the respective standard deviation values for each company?
Repeat that again?
Does this come back to the concept of sampling error for each company, since you can talk about respective standard deviation values for each company?
It's more to get a representative number of companies than anything. Because if I know back if let's say if 2 standard deviations only came up with 3 companies and 3 standard deviations came up with 8 companies, I would use 3 standard deviations. It depends on the size of the proxy group companies or the size of the group to make sure that you have enough to come up with a representative amount of companies that are comparable in total risk.
So as far as sampling error, so sampling error is a statistical error that occurs when an analyst does not select a sample that represents the entire population of data, and the results found in the sample do not represent the results that would be obtained from the entire population. Would you agree with that statement?
Yes.
So in this case, the sample data consists of the weekly returns over a period of 5 years that were used for the 259 data points, I think, to be exact, as you state on page 1 of Schedule DWD-6, correct?
Yes.
And what would the corresponding entire population be?
Well, the entire population in the database is over 6,000 stocks.
Over 6,000, you said?
Yes.
So is calculating a historical beta simply dependent on the time horizon and the frequency and length of the returns? That is, once you choose those parameters for a ticker and a corresponding index, any analyst should be able to calculate the same exact value of beta?
Yes, give or take. In value line, they adjust to the nearest 5.05.
So is it your position that in this case, the over 6,000 items you mentioned constitute the entire relevant population as opposed to the 259 of your subset?
What?
Okay, let me rephrase the question. So in this case, the 259 data points that you utilized, do they constitute the entire relevant population as opposed to a sampling subset?
I think your 259 is wrong.
And what number would you think it is?
It'd be 14 out of 6,000, right? If you're talking about the group, the subset of the group that of 6,000, which is comparable in total risk to the water utility proxy group, 14 out of 6,000 based on the selection criteria, which is the unadjusted beta is a measure of systematic risk or market risk, and the standard error of the regression is a measure of the non-market risk. That equals total risk, and using those ranges, you get to 14 out of 6,000.
So let's talk more about that risk. So looking at, again, Schedule DWD-6, page 3. Excuse me. You claim the non-price regulated proxy group is comparable in risk to the utility group, correct?
That's right.
But the non-regulated proxy group has an average unadjusted beta that is 25% higher than the utility proxy group, correct?
That is correct, but you also got to say that they passed the criteria. So I know it's not equivalent, but it's comparable, which is what we're looking for. And that's the same type of principles that we talk about in Hope and Bluefield, the comparable risk, where even the water proxy group is an equivalent in risk to Blue Granite, and me and Mr. Rothschild, and to some extent Mr. Parcell reflected that in size adjustments or moving to the top of their range. So if you're gonna say that this group isn't exactly risky, yes, it's comparable, it's not identical.
So if the non-price regulated proxy group is comparable in risk to the utility proxy group, why do 12 out of the 14 companies have an unadjusted beta that is higher than the average of the utility proxy group, which is 0.48?
Like I said, they passed the ranges, and that's the criteria. And this isn't I'm not the only person who does this type of thing. I know ORS in the past, back as far as I could remember, not the same exact, but definitely had non-price regulated companies as a measure, and they have consistently approved either mine or Dr. Carlisle's in the past, and this commission is not a stranger and does not share your view or Mr. Rothschild's view that these companies are not worth anything when it comes to the cost of equity for this water company.
Are you aware this is the first time that Mr. Rothschild has presented testimony such as this before this commission?
Yeah, I read his testimony, and I find it, this. I'll digress.
Thank you. Why are there 3 versions of Schedule DWD 9R in your rebuttal?
Oh, it's the 3 proxy groups that Mr. Parcell used.
Thank you. Now turning to the cost of equity. So Mr. Rothschild cites the VIX index in his direct testimony, correct?
Yes.
He cites the VIX at 13.78, correct?
You know what it is today? 30. That's why it's irrelevant to talk about VIX, because it's a 30-day measure. And if I did think it was something to hang my hat on for cost of equity, I'd be doing cartwheels right now, but it's not.
So the VIX is a measure of investors' expectations for the volatility of the stock market.
For 30 days? Yeah.
Correct. Okay. On pages 53, lines 4 through 6 of your rebuttal testimony, you state, and I'll wait for you to get there, pages 53, line 4 through 6. You state, because the cost of capital is a long-term concept, i.e. perpetuity in the case of the DCF model, the VIX is irrelevant to the cost of common equity in this proceeding, correct?
Yeah, I think I just said that.
Does Mr. Rothschild use this 13.78% in his cost of equity calculations?
He doesn't.
Thank you. On page 53, lines 12 through 15 of your rebuttal testimony, lines 12 through 15, you state, as of January 27th, 2020, per the term structure, the expected level of the VIX in December 2020 is 18.66%, which is significantly higher than the 13.78% level cited by Mr. Rothschild, correct?
That's right, and it's, I think, around in the mid-20s now, based on what happened with the coronavirus. So even that, and I know Mr. Rothschild didn't rely on it, but he did kind of imply that that means that there's lower cost of equity going forward, which I disagree with. But like I said, I haven't used this 18.66 either in my measurements, but just to show apples and oranges, or apples to apples, that it's not, even the long term, I don't think is, it's only 1 year, so.
So what implied volatility does Mr. Rothschild use in his CAPM analysis?
I think it's in his direct testimony or rebuttal testimony, isn't it?
So rebuttal on page 23, chart 1, it's 18.13%. Does that sound accurate?
Right, but that is not implied volatility based on what?
Well, do you know the term structure that he utilized?
Yes.
And what was that?
18.66.
And for a term of about 1 year, does that sound correct?
That sounds right.
In your rebuttal, you are critical of Mr. Rothschild's use of current market data to determine cost of capital, correct?
That's right.
Is it fair to say that Mr. Rothschild believes current capital markets are the best measure of what investors expect future capital markets to be?
I think that's what he says.
Do you agree with his opinion?
I think you need to take into account expected capital markets as well.
So do you think current capital markets are just one measure of what investors expect future capital markets to be?
Like I said, it's current and expected capital market conditions.
So on page 48, line 11 of your rebuttal testimony,
Line 11?
Yes, sir. Page 48, line 11. You state investor reaction to analyst forecasts, whether they be growth rate or interest rate forecasts, can be likened to weather forecasts, correct?
That's right.
On that same page, on lines 15 to 16, you state when severe weather is forecasted, those expected to be affected generally begin preparing by storing supplies of food, batteries, candles, etc., correct?
Yes.
So when analysts make interest rate forecasts, do investors and homeowners prepare?
Investors would, yes.
And as far as homeowners preparing, I mean, let's say a homeowner with an adjustable rate mortgage has a 2% interest rate. If they see a forecast with interest rates increasing to 5% in the next year or two, do you think they would refinance now if they could?
No.
Someone with an adjustable rate mortgage, you don't think would refinance if it was going up?
If
they
it's
saw
I thought you were
forecasts?
talking about interest only. Yes, they would refinance then.
Bond investors will also make preparations in the form of buying or selling positions based on interest rate forecasts as they become available, correct?
Yes.
On page 49, lines 18 through 21 of your rebuttal testimony,
18 through 21?
yes, sir, it states there are approximately 50 economists who contribute to Blue Chip, on which I have relied in my common equity cost rate analysis. To suggest that these economists be ignored by the investment community is counter to the efficient market hypothesis, correct?
That's right.
Then on page 49, lines 23 through 24, and page 50, lines 1 through 2 of that rebuttal testimony, you state an efficient market is one in which security prices reflect all relevant information all the time, with the implication that prices adjust instantaneously to new information, thus reflecting the intrinsic fundamental economic value of a security.
Yes, at that time, not in the future.
So do you consider recently published interest rate forecasts new and relevant information that should be considered by investors in the stock market?
Yes, and like I said in 49 and 50, or like FAMA says in 49 and 50, they are reflected in current prices, but that doesn't mean that that's going to be the future price.
So current security prices reflect published forecasts such as Blue Chips, correct?
That's right.
Just going one page forward, on page 51 of your rebuttal testimony, lines 9 through 16, you created a chart using ROEs for electric and gas companies, correct? Page 50.
That's right.
Okay. Why didn't you use ROEs for water companies for that chart?
It's harder to find. The data isn't readily available.
Going back a few pages, on page 43 of your rebuttal testimony, lines 3 through 5, you state that it's Mr. Rothschild's ROE, or that Mr. Rothschild's ROE proposal, if it were adopted, that it would be the smallest ROE in the country, correct?
Yes, as far as I know.
And what information are you basing that on?
Experience, and there are, I think there's RRA has some regulatory research associates. They have a limited amount of data about water companies, not individuals, not going back as far as 2007. As of, if you're looking at, what was it, page 52? So the data on the chart 3 that shows that there's no relationship between credit spreads and rate of return. They only have yearly ROEs. They don't have individual cases like the one I did in chart 3, so it doesn't really work out the way that to include it, but they do have some annual data that you can use, and as far as I'm concerned and as far as I know, what was it, 8.65 would be the lowest in the country by far, by 25 basis points or so.
And this is based on your experience, correct?
That's right.
So do you believe it would be the lowest ROR in the country if Mr. Rothschild's were adopted?
Probably not ROR, no. I'm actually recommending the top of my range is an 8.12 ROR, so no.
All right, I have no further questions.
Thank you.
Thank you, Mr. Chairman.
Thank you, ma'am. Town of Irma, Mr. Moore.
Mr. DeSantis, I want to try to give you a little bit of a heads up as to why I'm asking these questions. I've represented the town of Irma for approximately 40 years, and we've had problems with Carolina Water on a chronic basis. And we welcome the new management team. I can tell you people like Mr. Denton and others are a breath of fresh air for us. The sewage rates that we experience in the Friarsgate area are out of line already with competitors in the area. And this price increase has created quite a political uproar for the mayor and council in Irmo, and with good reason. Many of the people in town look to the town council and think that it's town council's fault that these rate increases, and we've seen already, I think, 2 in the last 5 years. This will be the 3rd. And there was one of the things I heard you say yesterday that I want to ask you about, because I'm going to be very brief with my questioning with you. But when you were talking about the cost of equity, all right, you referred to something that the South Carolina legislature has done that has increased the cost of equity. And the reason I ask you this question is this. If the South Carolina legislature has done something that is going to cause a rate increase in the town of Irmo, we need to know that so that the mayor and council can make positive, our citizens know it's the legislature's fault, and so that we can discuss with the legislature what they have done and why they've done it to cause a price increase in Irmo. So my first question is, would you please just describe for me, because it kind of went by quickly, what exactly is it that the South Carolina legislature did that is contributing to the need for a price increase on sewer in Friarsgate subdivision?
Thank you for the question, and I'll try and explain it as best I can. So what I referred to and what you're referring to from yesterday was on page 38 of my testimony, and it was the August 2018 downgrade of the South Carolina Commission, and it was a result of a federal court's denial of SC DN, which is South Carolina Electric and Gas request for a stay of the legislatively required $360 million rate reduction. It was not the commission who made that reduction, right? And while this isn't, and like I said last night, while this isn't specific to water or this company in general, the interference of the legislature and the General Assembly in commission matters where they should have, it's their jurisdiction, right? At least I'm not a lawyer, but interfering in commission matters increases the risk to every single utility investing in South Carolina. It's not their fault that you guys are going to get a rate increase. The rate increase is because the cost of doing business, cost to serve you guys. But basically, an equity investor, if they're looking at North Carolina and they're looking at South Carolina has uncertainty because the General Assembly is affecting what's going on with the utilities, whereas in North Carolina, they're not.
Well, in South Carolina, as I understand it, this is the first time we've ever had anything like the SC&G matter. But you're telling me that because the legislature tried to go to court in regard to the SC&G nuclear plant, that is going to increase the risk in South Carolina, and it is going to somehow or another raise the cost of equity in regard to the cost of sewer in Friarsgate.
That's right, but I want to kind of put a little finer point on it. My risk adjustment is more primarily based on size, and before this case, I was the witness in last case, and I had a similar 50 basis point adjustment for the size. So it's not, it didn't affect my actual bottom line number. The 1025 is just a risk adjusted number based on size, but what's going on with the legislature and their interference in matters dealing with the commission had to be addressed in my testimony. If not, that's what an investor would look at. So that's why I put it in. I don't think there's a basis point number on interference, but all in all, the unique risk in my judgment was 50 basis points.
So we need to go to the South Carolina legislature, our legislators in our area, and make them explain how come they're contributing to the increase of sewer costs in Friarsgate.
I'm sure the commissioners here would appreciate that.
Well, let me ask you this. If the South Carolina legislature is to blame, you say it's 1/2 of a basis point based upon this uncertainty?
I didn't put a number on it.
Well, if I want to be able to tell my citizens how much of this rate increase is the fault of the South Carolina legislature, how much on a sewer bill, how much is the legislature to blame for the increase?
I can't put a number on it, I'm sorry.
Well, can you put a percentage on it?
That would turn into a number. I'm not trying to be evasive, but like I said, it definitely figures into a risk calculation. I can't go to dollars and cents, but the risk is there, and it's in the back of investors' head and back of utilities' heads. Now the course infrastructure, they obviously have more than one subsidiary, as you spoke with Sean. I'm not even going to attempt his last name, but they have decisions to make too. So if they could invest in one of their subsidiaries that doesn't have regulatory risk based on the legislature, or they can, one way or the other. You can. They have to make that decision, and I'm not going to make that decision for them. But I know that the investors would for sure take that into account when they're putting their money down.
So, if let's assume this rate hike is 100% approved, and we're trying to explain to our residents how come they're paying so much, and how come there was such a significant increase, how much can we tell them is the fault of the South Carolina legislature?
I have an objection, Mr. Chairman. This witness has said he cannot answer that question about 4 times. I think that this question's been asked and answered, and Mr. Moore should move on. Thank you.
Go ahead.
I don't think it's the exact same question. I'm just trying to figure out, again, how these two things relate to each other.
Hey, I'm going to sustain that. We do need to get off of that one.
Thank you very much.
I think your point's been made well.
Thank you, sir. Thank you. Exactly how is the legislative conduct of the legislature impacting the rate increase of sewer in Friarsgate? I don't understand.
Mr. Chairman, Mr. DeSantis answered that question. He explained that, and I'm not going to repeat it, but he explained, and he explained the reason he put it in his testimony. He's answered that question several times, comprehensively.
Sustain.
Let me ask you this. if it's, if you can't tell me how much of the proposed rate increase is caused by the South Carolina Legislature Act in SC&G, who could tell me that?
So, and I'm going to try and answer this as best I can. Now, the order in this case, okay, the commissioners can put basis points numbers on that, and then that could, for sure, multiply out to dollars and cents to your constituents, okay? I don't get to make the decision on what kind of risk it is. It's the commission's decision to do that. So if they say 5 basis points, 10 basis points, 50 basis points, you could find that number. I can't give you that number, okay?
You did propose a number.
That's right, but this is all hypothetical because they have to approve, and they have to. The commission here has to make the decision whether or not my argument is valid or not.
Thank you very much for answering my question.
Yes.
Thank you. Mr. Knowlton.
Mr. DeSantis, I gather that you are an expert in water rates.
Not in this case. That would be Mr. DeStefano. I have completed rate studies and cost of services for other studies for other utilities, but I haven't had occasion to look at it in this case.
All right, I'm going to ask him the same question, but I would ask you, because this is very personal to us as consumers. When I pay my currently $130 water bill, that followed a 30% increase 2 years ago on a rate case, and now I'm being asked for 50% more. It gets very, very, very personal. And so the question that my conscience screams to ask is, why are our rates so much higher when we have experts like you preparing these? Because other interveners at public testimonies have shown very clear data that our rates are enormously higher, sometimes 2 to 3 times as much.
Now, I'm gonna refer to Mr. DeStefano on that because like I said, I haven't done a rate comparability analysis for Blue Granite and the surrounding areas. But I will note that me and ORS in this case, we have an overlapping range of rate of return from 9.75 to 10%. So, I mean, we're kind of in agreement in the, at least in that portion of the case. Now, like I said, I think the rate question would be better addressed to Mr. DeStefano, and I'm sorry I can't answer it for you. Yeah.
Thank you. Mr. Dover.
Just a couple quick questions for you. You brought up the fruit analogies a few moments ago. From my understanding, you in your comparisons, you compare our area to multiple areas. What areas are those? South Carolina. Okay, so you're comparing our water rates for South Carolina to who else?
Oh, so I'm comparing the rate of return, the investor required rate of return for Blue Granite,
Yes.
in comparison to publicly traded water utility companies across the country.
Okay. Alrighty. Now, in the sense of apples to apples, oranges to oranges, or apples to oranges, obviously South Carolina, how does that compare to California and the Northeast, which these are two areas that you testified yesterday that you do compare us to?
Right, and I like I said yesterday, they are not perfect substitutes, so you can't take the results that I got from the proxy group companies and just apply it straight to Blue Granite. You have to make a comparison, and which I think you're trying to do
Right.
here. But the company is significantly smaller than the groups that I started out the analysis with, and like I said at length with Mr. Moore, they have a little they have some regulatory risk based on the interference of the legislature in commission matters. So that's where I can. So I try and bring my analysis to be as specific to Blue Granite as possible.
All right. You know, just because, just knowing that the cost of living in South Carolina is much, much less than California, Northeast, anywhere, you know, and so is there a closer range, a closer place, a closer proximity for us to be compared to as these others?
As I understand your question, it's not affordability. It's more what an investor would require for those operations. So let's say a construction operation, their profits or their requested ROE would be pretty much consistent throughout the country. So it's not, and I agree that South Carolina has a lower cost of living than those places. But you're not. I don't think we're speaking the same language on that. I think you're looking for a return on an investment, not the affordability of it and that because like the cost of water for Blue Granite is probably best explained by Mr. DeStefano. But my portion of it is just finding out the investors' required rate of return on the operations of Blue Granite.
Sure. And I guess that brings up the question, why are we trying to make money off of water and sewage? So, which I know it's not a question for you, but it's a question that, as a consumer, we're sitting there going, why is this even an issue at this point? So thank you for your testimony.
Thank you.
Thank you. ORS.
Morning, Mr. DeSantis. How are you?
No questions for John yet, guys.
Sorry. My questions should be relatively brief, I think, and hope. So there's a lot of data on this spreadsheet. I'm going to do my best to make sure that the Elmo can capture it all. That being said, we've got copies. Hold on one second. We've got copies for the commissioners, I think for you, Mr. DeSantis, and for y'all as well. Hopefully we have extras for everybody, but there you go.
Sure you don't want that? Now I got Air 27. I don't think that's mine.
Just while we're doing this, just as a public service announcement from the owners of the building, the bathrooms are backing up, so please do not use them until further notice. Please go to the Santee building across the street. Thank you so much.
This is in Blue Granite service territory, isn't it? Because that'd be the worst thing ever.
Mr. DeSantis, while this is being handed out, do you recognize this document?
I do. I think it was a response to a discovery request.
That's right. I noticed that when I move, a shadow falls on the Elmo, so I'll do my best to stay over here. Mr. DeSantis, and on the Elmo, this is terribly small. I apologize for that. So I may actually wait until commissioners get a copy if you don't mind.
That's fine.
Thank you, Alex. Mr. DeSantis, does this response to ORS discovery, I think it was economics request number 4, detail the cases which you've provided testimony, the ROE recommendations that you've made, whether those cases are still ongoing, and the ROE that was ultimately approved by the commission? I may be doing something wrong here.
Yes.
There's so much data. I apologize. It's just a very...
Why don't you just go ahead without the Elmo, because that, we can't see that.
Okay. Mr. DeSantis, I have tried to, as unhelpful as this may be, number the number of cases over on the left-hand side. Some of these cases are still ongoing, so we're going to exclude those, obviously.
Sure.
But is it fair to say that over the last 10 years, you've provided testimony in 44 cases?
Yeah, that's about right, and a couple more since this.
Okay. And of those 44, 34 have concluded. Is that correct?
Yes.
Okay.
Give or take.
Sure, okay. And of those 34, how often was your recommended ROE accepted?
The case, this last case, and I had a recommended decision take my entire position, but then the PUC of Pennsylvania pulled it back a little bit.
So based on the data you provided us, and again, I won't even try to move the sheet, but based on the data that you provided us, I'm correct in saying that your recommended ROE was accepted once, correct?
Yeah, and it's pretty rare because commissions usually have to balance the positions in the case, and it's not very often that you get your Fisher wish, so to speak.
Sure, that makes sense. Now, many of these, maybe all of them, in fact, you recommended a range. Is that correct?
And some of them I did, and some of them I didn't. And the majority, and I guess for the commission, it's the third row from the right. There's that note, the note, and these are all settlements. So I mean 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 out of 30, 20 out of 30 were settled. So I mean, it's not. We didn't go to a decision on those cases. So I mean, it's not. I don't think it's entirely fair to say that they took because it's a product of negotiations.
Well,
the parties.
Sure. It's also not fair to say though that there wasn't a decision on that case. There was a commission order on those cases, correct?
That's right. But everybody has to agree to it, and sacrifices are made one way or the other to get everybody to agree to those. And ROE is a pretty good lever to use on those settlements.
Sure, but the commissions issue an order adopting potentially what is proposed as a settlement. Is that correct?
That's right.
Okay. Mr. DeSantis, of these 34 cases which are still ongoing and in which you recommended an ROE range, I'm correct in saying that in 33 of those 34, your range, even the lower end of your range, is actually higher than what the commission ended up adopting, correct?
Yeah, say that again. Just one.
Sure, it was. Sure.
It was a long one.
Yes, sir, it was. I'm correct when I say that in these 33, the cases that are still ongoing that you've listed here, even the lower end of your range was higher than what the commission ended up adopting. Isn't that correct?
That subject to check, yes.
Okay. Mr. Chairman, I'd ask that this be entered into the record as the next hearing exhibit.
Okay, we'll enter this into the record as hearing exhibit number 18.
And Mr. Chairman, does the court reporter have a copy? Okay. Thank you, Mr. DeSantis.
Good day.
Okay. Commissioners. Commissioner Howard.
Thank you. Mr. Sanders, how you doing?
Doing well. How are you?
Fine, good to have you with us. I know you don't like questions like this because it's, but what role in your mind, even subconsciously, does nationwide averages of ROE plays? I mean, when you come in with an ROE, it's like 20 points above the national average. Somewhere in the back of your mind, you got to say the national average is 9.8. Why am I doing 10.8? Does that play any role in it? Apparently not.
I usually go with my model results. I do look to them as a guide, but not a hard stop, like a guidepost, like if just to look and see where you are. But mainly and principally, my numbers are based on my models.
And so really, subconsciously or not, the national average doesn't come into play.
It only comes into play usually during rebuttal when you see some request as low as Mr. Rothschild's number, where no water company in the country has an ROE that low, and just the smell test shows that it just doesn't make any sense.
I hate to quote Dr. Carlisle because he's not here, but it seems to me from my memory that he says that size doesn't matter. I mean, does that mean what size the company is? What are your thoughts on the role that size plays in a calculation?
So explaining my testimony, I do have a 50 basis point size adjustment to that. Now, I think that size does matter, and it's because it takes a lot where these companies are they aren't that great at smaller companies as compared to big companies. Now, Utilities Inc. is a bigger company, but still small compared to the proxy group companies. And I usually do an exercise for former Commissioner Fleming, and I showed that even Utilities Inc. or Cork's Regulated Utilities Inc. is smaller than the proxy group companies. But to that effect, these companies in general have a tougher time attracting talent, and I think the management team is trying to address that in their move. But then they also have they have to stay on the road. When you're driving down the street, they got to stay on the road because there's no shoulder for them. Whereas big companies have a shoulder where they can pull over and get help. The small companies don't have that margin for error, and that's the reason why there's additional risk attributable to that.
Thank you very much.
Yeah.
Commissioner Hamilton.
Thank you, Mr. Chairman. Mr. Spinosis, I noticed that your depreciation is 67.5 years for it. I think you and Mr. Garrett both agree that this is too long.
The current estimates of a composite over the entire asset base is 67 years for all assets. And yes, both myself and Mr. Garrett agree that that's too long. And in both cases, only one account on the water side and on the wastewater side have an average life of over 67 years. So that's a representation that the current estimates are too low and lives are too long.
Okay. On the curve, on the Iowa curve, 18, which best fits the proper depreciation?
Well, in the depreciation study, both that I performed and the work that Mr. Garrett performed, we take a average service life and Iowa curve for every account separately. We don't do one for the entire asset base. So each individual account has a separate average service life and Iowa curve combination. And I think the best way to find that is if we go to page, for example, on the water study, if we were to go to page 6-4, column 2, it says survivor curve, and you can see the average service lives and Iowa curve combination for each account. And in my report, all of the assets, with the exception of the mains account, have an average service life less than 66 years. And a similar, in Exhibit 2 for wastewater, similar presentation is set forth in that particular report. And I think that will give you an idea. And then I also, in the report, in Section 6 of each report, you will have the presentation graphically of the Iowa curves that matches not only the overall life characteristics of the account, but it also presents the historical data of the company, so you can see a comparison of the two.
Thank you, sir, very much. Thank you, Mr. Chairman. That's all I had.
Thank you, sir. Commissioner Whitfield.
Thank you, Mr. Chairman. Good morning to both of you.
Morning.
Mr. DeSantis, I think my questions are going to be mainly for you. Sorry, Mr. Spanos, but I think I'm going to give you a pass this time. Mr. DeSantis, when you were talking about your overlap with ORS, you talked about just a few minutes ago about 9.75 to 10, and I thought, well, wait a minute, wasn't he 10.2 to 10.70? And then I remembered in your rebuttal testimony, you had reduced your recommended range from 10.2 to 10.70 to 9.75 to 10.25. Along those lines, you further state in your rebuttal testimony that the CAPM analysis for rate making and cost of capital are prospective. Number one, does your reduction in the recommended common equity rates indicate a downward trend in investor expectations for similarly situated utilities?
Yes, I mean that's a short answer, but I mean just from this case to last case, my recommendation was 1045 to 1095, and it was unchanged. Now in the direct case, my number went down from 1045 to 1090 to 1020 to 1070, and further still from 975 to 1025. That being said, or 975 to 1025, if I misspoke. But that being said, these numbers represent the investor expectations of ROE for these companies going forward, and it speaks to even though me and Mr. Parcell did different analyses using different inputs, using somewhat different companies, we came to an agreement basically on that 975 to 10 is a reasonable range. Now, I think my range goes a little bit higher and his goes a little bit lower, but all in all, you know, there is consensus that look in a clustering of that looks like a reasonable number, even though it's obviously lower than it was in last case, and I think everybody reflects that in their testimony.
We talk about the proximity to beta often a lot of times in these cases, and you also state on page 13 of your rebuttal that the low beta securities such as utilities can earn returns higher than the CAPM predicts. Doesn't a beta less than 1 indicate less risk and volatility, which would lead to investors demanding a lower return than the market as a whole?
Yes, lower than the market as a whole, and I don't think anybody disputes that. But what I do say, and I think it's probably easiest to talk about it and show you a picture. And on page 28 of my direct testimony, it kind of shows the empirical findings of what actually happens with earned returns versus actual returns versus predicted returns on the CAPM, and I'll wait for you to get there.
The graph?
Yeah, the graph.
Yes, the graph, yes.
So as you can see, this graph, the bottom end of the graph has the betas that are under 1, which indicate lower than the market. And yes, so we're looking at the dots anyway.
I'm fine. I was just asking the chairman if you wanted it on the Elmo, but I'm following you.
Okay. So the bottom of that line, the dotted line, they show the actual returns that actually happened, and the straight line, the solid line, is what was predicted in the CAPM, and that spread. So the difference between the dotted line and the straight line is what we're missing when we use the CAPM. And as it shows that as you get closer to the 1, you can see that you got an intersection of that line eventually, and that's at 1, right? So the closer you are to 1, the more accurate the CAPM analysis would be. But nowadays, I mean, you're looking at 0.6 beta right now for water companies. So you could see that there's a fairly large discrepancy between what actually happened versus what is predicted by the CAPM. So I agree with you that, if you're lower than 1, it's lower. If your beta is lower than 1, you're going to require a return less than the market. But on the other hand, you're requesting more than what the CAPM actually says. You're looking higher than that based on what actually happened in the world.
Thank you. I'm going to kind of revisit a little bit of an issue that Mr. Moore did just a little bit ago, and I'm going to try to help all of us out without Mr. Ellerby getting out of his seat or chairman calling me down. But Mr. DeSantis, you were talking about the risk, and you were talking about the legislature and those sorts of things. And I think you said the action they took, that was Act 258, the legislature passed. I think you're familiar with that. And the commission did act, but it was as a result of Act 258, right?
Right.
And once the commission acted, of course, the company SC&G sued the commission in federal court, and the court sided with the company, and we all know that. But to get to the root of maybe the root of the discussion there, and while I know you can't put a number on it, what I want to maybe bring out here is what you're saying that impacts is the cost of the equity portion, the equity portion, not the long-term debt. And what is that number in at least in your direct testimony, what is that number?
You're talking about the specific number.
Yes, sir.
That is attributable to what?
Equity.
Oh,
the equity portion.
Oh, okay. So the equity. So my unadjusted number was 1020 in my direct testimony. It's 975 in my rebuttal, and then I put a 50 basis point adjustment for size and other unique risks attributable to Blue Granite. Now, as I told Mr. Moore, I can't put a number on it, but you guys can.
No, but the number, the portion of the common equity, I'm showing in your testimony is 51.04%.
Oh.
That's where, yes, sir.
Okay. So the proportion of equity was corrected in the direct, and it's actually 52.91%.
Per your rebuttal.
That's right.
52.
Yeah.
From 5104 to 52.
Yes, and I think we put forth corrected testimony in October, I want to say, or not October, December.
And again, you can't put a number on that, but that's the portion that would be affected potentially.
That's right, sir.
Is that fair enough?
That's right.
Okay, thank you. Ms. Liebarker, I think went down this path with you, so I'm going to kind of follow up on one of her questions. She asked you a lot of questions, and she covered most of what I was going to ask you, so I'm kind of down to one question, and it was kind of in the path she was going in. You state on page 27 in your rebuttal testimony, and I'll give you a minute to get there. we've talked about everything from water utilities to the 1,200 pool, and then, but the number I want to hone in on just a minute, you include a proxy group, I say 13, it's actually 14, I think I counted on the screen a minute ago, of non-price regulated companies, including businesses such as AutoZone, Cracker Barrel, other restaurants I think I saw on there, Cheesecake Factory, Dollar General, all those sorts of businesses that are non-price regulated and are clearly not utilities. Why should the ROE for companies that are so different from a utility, and then you talked about electric and gas utilities being different from a water utility, but why should companies that are so different from a utility period be included in the analysis?
Okay, so now water companies, when you talk about competing for capital, right? Water companies compete with utilities and non-utilities for that capital, equity or debt, and that should be reflected in an ROE.
In other words, the investor choice.
Right. So it's I want to say it's along the corresponding risk, but a corresponding risk standard where you're gonna, if you deem these companies similar in risk, they are all going to be competing for the same amount of capital. Now, I measure the total risk by using the unadjusted beta that measures market risk, and the standard error of the regression, which measures non-market risk, and market plus non-market risk equals total risk, and all three of the witnesses in the proceeding agree to that. So when you get the similar ranges of both risks for each company, those companies are deemed similar in total risk. Now, I have some other things that, and I'll go down the list, and you're right, 13 companies were my rebuttal. So 13 in my rebuttal, 14 in my direct.
14 in your direct, yes.
So you're right. And I'm going to point to my direct. And basically, these aren't utilities, but they are consumer staples. Like, everybody's got to go get your car fixed every once in a while, right? And that's AutoZone. Everybody's got to go out to dinner, Cheesecake Factory. Somebody's got to go to the store, Casey General Store, Cracker Barrel, Dollar General. All these things are staples of American life. Now, while they're not utilities, they are still very much a part of American life. Usually, sometimes I have cigarette companies in here, and usually I say, you tell a smoker that cigarettes aren't necessary, and you'll have a fight on your hands. But
again, they do have the choice whether to go to AutoZone or Napa.
Well, that's true, but these companies are considered consumer staples, and they are deemed similar in risk of these companies. And I think I actually have another, and to kind of put this thing to bed on, I want to say it's 6R, but I'm just going to make sure. Yeah, it's actually scheduled DWD 8R. I put together another measure of risk, which is a coefficient of variation of the net profit of my utility companies and my non-utility companies, and the mean and the median of the non-regulated companies, the coefficient of variation, is within the range of what the utility companies are. So that shows another measure where these companies are similar in risk to the water utility companies. So not only the two that I did in direct, I put an additional study in a rebuttal, and it all says the same thing.
And I certainly I certainly understand your point about investor choice as well. Well, thank you. That's all I have, Mr. Chairman.
Thank you. Commissioner Belzer.
Mr. Spanos, you're off the hook. Sorry, I'm not an engineer. Good morning, Mr. DeSantis. How are you?
Good morning.
You've used this phrase a couple of times, and it intrigues me when you said we're in agreement when you're talking about the other rate of return witnesses. I take it you're referring to their pre-file testimony. Y'all haven't talked and said we agree that we're in this range. Is that a fair?
That's right.
Okay,
That's
so
right.
so you're taking their testimony where it matches yours and saying we're in agreement, basically.
Yes, and specifically the recommended range of Mr. Parcell and I, and the overlapping of that range.
When an investor seeks to invest in a company, whether it's an equity, well, I mean, we're particularly talking about equity investors. Do they consider the company's reputation and how well it's run and the reputation among its consumers and things like of that nature?
I would think so. That would all figure into business risk. So yeah, I would think so. Yes.
And certainly, the debt investors would consider how well it's run.
They usually just care about if they're going to pay their bill.
Okay.
but I mean, I'm sure it may be a consideration.
And would you agree that the determination of what you do, of your job, and Mr. Parcell and Mr. Rothschild, that coming up with a recommended ROE or range or point or however the witness chooses to do it, that there's a certain degree of subjectivity to the process?
Yes.
And I think I've often heard of it described as much art as science. Would you agree with that?
I would agree, yes.
Thank you very much. I mean, there's just no formulaic method that you plug in numbers and come out with a result.
No, and I think it's kind of the same thing I was talking with Mr. Moore. You can't really put your finger on it, but it's there.
Is there any room in the process to consider affordability of how the result that comes out impacts affordability for the consumers?
I would say that my portion would not come into account with affordability, but that doesn't limit the company to say put a rate design together and have something approved by the commission for low income or anything like that. But my portion would straight be what equity investors would require.
Okay. Thank you very much. Appreciate your testimony today. Thank you, Mr. Spanos.
Thank you. Commissioner Urban.
How reliable are forecast yields on U.S. Treasury bonds?
How reliable are they? It doesn't, and I know I'm going to get flack for this, but it doesn't matter whether or not they're reliable in hindsight. It only matters if that's the best possible prediction at the time. And I use the blue chip financial forecasts that have 50 economists that make the predictions of what these yields will be in the future. And I rely on them because they've been published consistently since 1980. And if they weren't respected by the investment community, just according to market forces, they would be ceased publication. So I mean, it's not accuracy per se. It's more the investor sentiment at the time.
You would agree that forecasted T-bonds are often higher than actual T-bond yields?
Yes, I would.
Thank you. No further questions.
Yep.
Thank you. Commissioners, any other questions? Okay, thank you. If you got redirect. And let me know if it's a lot. Because if it is, I'm going to break right now.
I have no redirect, Mr. Chairman, but I do have a correction. I put in the wrong set of direct testimony. It's my fault. What I failed to ask Mr. DeSantis about was whether he had caused to be submitted corrected direct testimony, which was pre-filed in this docket on January 10th of this year.
I was off by a month, yes.
Okay. And were changes made as disclosed by the cover letter in pages 2, 10, 11 of that testimony?
Yes.
And was there also a correction made to Schedule DWD 1, page 1?
Yes.
And were those, you probably wouldn't know, but that corrected testimony was filed in this docket and served on all parties on January 10th?
Yes.
Mr. Chairman, what I would propose to do to avoid confusion, I've been looking through some rather large records and finding them to be very confused. What I would like to do is substitute the corrected direct testimony that was pre-filed on January 10th and served on the parties for the direct testimony that I put in yesterday through Mr. DeSantis.
Okay, so we will enter and substitute the corrected pre-filed direct testimony. Are there any objections first? Okay. We'll substitute those corrected pre-filed direct testimony that was filed in January for the originals that we did yesterday, January 10th. They'll be entered as though given orally from the stand.
Thank you very much, Mr. Chairman, and we would ask that these two witnesses be excused.
What about, did we have an exhibit too that was corrected?
Yeah, the exhibits were attached to the.
Okay, they were attached.
Yeah,
okay,
I'd
so
like
that's all.
those to be just substituted for whatever exhibit that was.
Okay, that
was my thought.
That exhibit will be as well.
Hope that will be less confusing.
Okay.
And I apologize for not catching this earlier.
Thank you.
Of course, it's Mr. Welborn's fault.
Okay.
I'll take
the Of course.
Could these two witnesses, Mr. Chairman, be excused?
Yes.
Thank you.
Thank you.
Okay. What we're going to do now, we're going to take a break, but if without objection, we're going to move out of order and get the date certain witnesses from Consumer Affairs in, and it's going to take a few minutes to set that up. So we will take a break, and then we will resume with those witnesses. Thank you.
The audio, Mr. Mirzwa, you need to turn the audio off on your PC, please. Thank you.
Okay, welcome back. Kept hearing voices coming from above. I didn't know we should do something different. Okay, so we're going with Department of Consumer Affairs, if you'll call your panel.
Thank you, Mr. Chairman. Richard Witt from the Witt Law Firm for the South Carolina Department of Consumer Affairs. And we'll call our panel, which is Aaron Rothschild and Jerry Mirzwa and Lafayette Morgan.
Okay, and I think I have to swear in Mr. Mirzwa. Okay, so Mr. Mirzwa.
Yes.
Do you swear or affirm that the testimony you'll offer today is your own testimony, and it'll be the whole truth and nothing but the truth?
I do.
Thank you.
Mr. Chairman, you're finished?
I think so.
Thank you. Mr. Mirzwa, by whom are you employed in what capacity?
I'm employed by Exeter Associates, and I am a principal of Exeter and the president of Exeter.
Did you cause to be prepared direct testimony in this matter consisting of 9 pages?
Yes, I did.
Do you have any changes or corrections to your pre-filed direct testimony?
No, I do not. Not that I'm aware of.
Okay. If I ask you the questions today, would your answers be the same?
They would be.
Have you prepared a summary of your direct testimony?
Yes, I have.
Can you give that at this time?
Certainly. I begin my direct testimony by explaining that I hold a Bachelor of Science degree in marketing and a master's degree in business administration with a concentration in finance, both of which are from Canisius College, and that I have provided testimony on more than 350 occasions and proceedings before the Federal Energy Regulatory Commission and Utility Regulatory Commission, 16 states. My direct testimony was filed on January 23rd, 2020, and addressed cost allocation and rate design issues. In addition to the introductory section, my direct testimony was divided into 3 additional sections. In the first additional section, I provided a summary of Blue Granite's current and proposed rates for water service and presented an overview of water utility class cost of service methodologies. In that section of my direct testimony, I explained that a class cost of service study is generally conducted to assist the utility or commission in determining the level of cost properly recovered from and the charges assessed to each of the various customers to which the utility provides service. I explained that in a class cost of service study, the allocation of recoverable cost to each customer class is generally based on cost causation principles. I noted that the most commonly used and widely recognized method of allocating costs to customer classes for water utilities is the base extra capacity method, described in the American Water Works Association's Principles of Water Rates, Fees, and Charges, or commonly referred to as AWWA M1 manual. In the second additional section of my direct testimony, I explained that one of the principles of a sound rate design is the use of the results of a class cost of service as a guide to setting rates. I then noted that the base facility or monthly customer charges proposed by Blue Granite for water service were not reasonable. As the basis for this claim, I used the base extra capacity class cost of service method presented in the AWWA M1 manual to determine appropriate monthly customer charges for water service. I found that the charges proposed by Blue Granite were significantly in excess of cost of service monthly customer charges and were in excess of the existing monthly customer charges. More specifically, I determined that appropriate cost-based monthly customer charges for residential water service customers would be about $10 per month. By contrast, Blue Granite's current monthly customer charge for residential customers in Service Territory 1 was $14.38, and the company was proposing to increase the charge to $22.09. For Service Territory 2, the company's current monthly customer charge for residential customers was $28.59, and the company was proposing to increase the charge to $38.58. Therefore, I recommended that Blue Granite's current monthly customer charges not be increased, and that any increase in revenue authorized by the Commission in this proceeding be recovered through increases in the volumetric commodity and distribution charges. In the final additional section of my direct testimony, I expressed two concerns regarding Blue Granite's proposed charges for sewer service. First, Blue Granite currently assesses a fixed monthly charge for sewer service, and the company was proposing to continue this rate design. That is, volumetric charges are not assessed for sewer service. I noted that assessing volumetric charges for sewer service based on water service usage is a common practice of utilities and may be a better approach for matching cost causation and cost recovery. To address this concern, I recommended that in its rebuttal testimony, the company address whether it would be reasonable to assess volumetric charges for sewer service based on customer water usage. My second concern related to Blue Granite's fixed charge for sewer service provided to commercial customers that were based on the single family equivalent, or SFE, of each commercial customer. I noted that the use of SFEs may not provide a reasonable matching of cost causation and cost recovery. I recommended that in its rebuttal testimony, Blue Granite address whether assessing commercial customers' sewer service charges based on each customer's SFE was reasonable. In my direct testimony, I recommended that Blue Granite address both sewer service rate design issues in its rebuttal testimony because although the consumer advocate had submitted discovery to Blue Granite concerning both of these issues, responses to that discovery was outstanding at the time I prepared my direct testimony, and I was unable to evaluate these issues. That concludes my direct testimony summary.
All right, thank you. Mr. Chairman, we moved witness Mirzwa's direct testimony into the record as if given orally from the stand.
Mr. Mirzwa's pre-filed direct testimony will be entered into the record as though given orally from the stand.
Now, did you have an exhibit to your direct testimony?
Yes, I did.
Did you have any changes to that exhibit?
I changed the exhibit I included in my direct testimony. I changed it in my rebuttal testimony.
Okay. Mr. Chairman, we'd move his exhibit JDM1 into the record as the next hearing exhibit.
Mr. Mirzwa's exhibit JDM1 will be entered as exhibit number 19.
Thank you, Mr. Chairman. Mr. Mirzwa, did you cause to be prepared rebuttal testimony consisting of 7 pages?
Yes, I did.
Do you have any changes or corrections to that testimony?
Not that I'm aware of.
If I ask you those questions today, would your answers be the same?
Yes, they would be.
If you have a summary of your rebuttal testimony, will you read that now?
Yes, certainly. The primary purpose of my rebuttal testimony was to respond to certain aspects of the rebuttal testimony presented by Mr. Dante DiStefano on behalf of Blue Granite Water Company, which addressed the recommendations presented in my direct testimony. However, before responding to those portions of Mr. DiStefano's rebuttal testimony that addressed my recommendation, I responded to rebuttal testimony addressing the Office of Regulatory Staff, or ORS, DiStefano. More specifically, in response to a suggestion by ORS, Mr. DiStefano indicated that the company was open to filing a cost of service study in its next case, and that this would provide the best roadmap for setting appropriate monthly customer and volumetric charges for the company's customer groups. In response to Mr. DiStefano, I explained that movement towards adoption of cost of service-based rates should not be deferred until Blue Granite's next rate case, but should begin this proceeding. I found no basis to delay movement towards cost of service-based rates in this proceeding. With respect to my direct testimony recommendation that Blue Granite's existing monthly customers charge remain unchanged, Mr. DiStefano claimed that the cost of service analysis I used to support my recommendation was incomplete because it did not account for post-test year plant additions, cash working capital, and other pro forma adjustments. In responding to Mr. DiStefano's claim concerning my analysis of monthly customer charges, I noted that a detailed breakdown of plant balances and expenses by account was necessary to perform that analysis, and my cost of service analysis was based on the end of test year per book trial balances per account provided by the company. I noted that Mr. DiStefano was correct that the trial balances for each account did not include the company's pro forma adjustments, but this was because the company did not present pro forma adjustments by account. Therefore, I was unable to include the pro forma adjustments in my monthly customer charge analysis. To specifically address Mr. DiStefano's concern related to pro forma adjustments, I modified my cost of service analysis to reflect the impact of incorporating the company's proposed post-test year plant additions, cash working capital, and other pro forma adjustments. My modified monthly customer cost of service analysis indicated a pro forma adjusted consolidated monthly customer cost of service charge to be approximately $9.40, which was even lower than the monthly customer charge presented in my direct testimony, and significantly less than the current monthly customer charge for Service Territory 1 of $14.38 and Service Territory 2 of $28.59. Therefore, I continue to recommend that the existing monthly customer charges for each service territory not be increased. I then explained that the monthly customer charge was lower under my revised analysis primarily for two reasons. First, while reviewing the initial customer charge analysis presented in my direct testimony, I discovered that I had overstated the return income tax component of customer costs. My revised analysis corrected this overstatement. And secondly, the company's monthly customer charge related pro forma adjustments were negative, resulting in a decrease in customer charge related expenses. In his rebuttal testimony, Mr. DiStefano recommended that the cost of service considerations with respect to the design of water service rates be deferred until the company's next proceeding. In response to this recommendation, I noted that the cost of service customer charge I was presenting in this proceeding, which was based on the base extra capacity cost of service methodology commonly used by water utilities, was reasonable and indicated that the company's current proposed monthly charges are significantly in excess of cost of service-based customer charges. Therefore, I believed it appropriate to begin movement toward cost of service rates in this proceeding, and this movement should not be deferred until the company's next base rate proceeding. With respect to my recommendation in my rebuttal testimony, with respect to my recommendation that in its rebuttal testimony the company address assessing volumetric charges for sewer service based on water usage, Mr. DiStefano noted that only approximately half of the company's sewer customers are also provided water service. Therefore, the lack of water usage data prevented Blue Granite from adopting volumetric billing for sewer service. In my sewer rebuttal testimony, I found that the company had adequately addressed this issue in its rebuttal testimony, and I had only raised this issue because the discovery served by the consumer advocate related to this issue was outstanding at the time I filed my direct testimony. The other issue I recommended that the company address in its rebuttal testimony for sewer service was the use of SFEs to determine the fixed charges assessed to commercial customers. I also recommended that this issue be addressed by the company in its rebuttal testimony because the discovery related to this issue was outstanding at the time I prepared my direct testimony. Since that time, the company has responded to consumer advocates' discovery, and my review of that discovery indicates that the use of SFEs for commercial customers appear reasonable. That concludes my sewer rebuttal testimony summary. But before continuing, I would like to thank the Commission for allowing me to testify by video conference.
All right, thank you. Mr. Chairman, we'd move Mr. Mearswaugh's sir rebuttal testimony into the record as if given orally from the stand.
Mr. Mearswaugh's sir rebuttal testimony will be entered into the record as though given orally from the stand.
And Consumer Affairs also wants to thank the chairman and commission for allowing this video link. We'll turn to Lafayette Morgan now. Mr. Morgan, can you state your name and business address for the record?
My name is Lafayette Morgan Jr. My business address is 10480 Little Patuxent Parkway, Columbia, Maryland, 21044.
By whom are you employed in what capacity?
I am a public utilities consultant with Exeter Associates.
Did you cause to be prepared corrected direct testimony consisting of 19 pages?
Yes, I did.
Do you have changes or corrections to your testimony?
I have some minor typos.
You publish those now, slowly, for the court reporter?
First one appears on page 12, line 13. On line 13, as it appears in my testimony, it says reflected in base. It should say reflected in rate base. Then on that same page, on line 19, the last sentence on that line says as means, and it should read as a means of. Then on line 13, line 3, I'll start on line 2. The sentence starts, first I recommend that first I recommend that deferred liability, and it should read, first I recommend that the deferred liability. On that same page, on line 7, the last two words on that line of the should be removed. On line 15, on page 15, line 11, towards the end of that line, I state recovery the, and it should be recovery of the. And finally, on page 16, line 3, I state the sentence that begins on that line, hence for rate making purposes, we should delete making so that it reads hence for rate making purposes.
Mr. Morgan, with those changes in mind, if I ask you the questions today, would your answers be the same?
Yes, they will.
Have you prepared a summary of your corrected direct testimony?
Yes, I have.
Would you read that at this time?
Yes. My name is Lafayette K. Morgan. My business address is 10480 Little Patuxent Parkway, Suite 300, Columbia, Maryland, 21044. I am a public utilities consultant working with Exeter Associates Incorporated. Exeter is a consulting firm specializing in issues pertaining to public utilities. I received a Master's of Business Administration with concentration in finance from the George Washington University. I also received a Bachelor's of Business Administration degree with concentration in accounting from North Carolina Central University. Over the years, my work has involved natural gas, water, electric, and telephone companies. From May 1984 until June 1990, I was employed by the North Carolina Utilities Commission public staff in Raleigh, North Carolina. I was responsible for analyzing testimony, exhibits, and other data presented by parties before the North Carolina Utilities Commission. From June 1990 until July 1993, I was employed by Potomac Electric Power Company in Washington, D.C. as a senior financial analyst. At PEPCO, I was involved in the preparation of the cost of service, rate base, and rate-making adjustments supporting the company's request for revenue increases in the state of Maryland and the District of Columbia. From July 1993 through 2010, I was employed by Exeter Associates as a senior regulatory analyst. During that period, I was involved in the analysis of the operations of public utilities with particular emphasis on utility rate regulation. In 2010, I left Exeter Associates to pursue startup activities for other business interests. In late 2014, I returned to Exeter to continue to work in a similar capacity prior to my hiatus. Exeter Associates has been retained by the South Carolina Department of Consumer Affairs to assist in the evaluation of the general rate filing submitted by Granite Water Company. My role in this proceeding is to determine the level of revenues that BGWC should be authorized in this proceeding, as well as address certain policy issues. On October 2nd, 2019, the company filed its application seeking a combined water and wastewater revenue increase of $11,731,803, which is comprised of a proposed increase of 53.5%, or $3,636,850 to the water service rates for Territory 1, a proposed increase of 34.9%, or $1,939,107 to water service rates in Territory 2, and a proposed increase of 55.7%, or $6,155,846 to consolidated sewer service. I have determined that the company has a revenue deficiency of $6,979,049 for the test year ended June 30, 2019. This represents a decrease of $4,752,754 when compared to Blue Granite's requested increase of $11,731,803. The issues that I discuss in my direct testimony. First is the post-test year land purchase. I am recommending an adjustment to remove the inclusion of post-test year the inclusion of a post-test year purchase of land from rate base. Although the company testimony indicates that the company proposes to remove this item from the revenue requirement, Mr. DeStefano's direct exhibit number 1, Schedule C, Service Territory 1 and Service Territory 2, page 2 of 7, shows an inclusion of that amount. Deferred maintenance costs and rate base. I have removed the balances of maintenance work related to a wastewater treatment plant, tank recoating, and various hydro tank inspections, which was included in the rate base as deferred maintenance balances. I'm also recommending that that an adjustment to reduce operating expenses by $73,000 to remove the amortization of these costs from the revenue requirement determination. I'm also removing these costs because they will be incurred after the test year. Amortization of deferred assets and liabilities. In its rate increase filing, Blue Granite proposes to amortize several deferred items on its books. As a means of mitigating the impact of this 49% rate increase, I'm recommending two changes to the company's proposal for the amortization of the deferred assets and liabilities. First, I recommend that the deferred liability of $335,713 related to a change in the federal income tax rate, the TCJA, be used as an offset to the deferred purchase water and wastewater treatment costs. In addition, I'm recommending that the amortization of the deferred purchased water and wastewater treatment costs be changed from 3 years to 5 years. Rate case expense. Blue Granite's total rate case expense claim is $637,273, which it proposes to recover over a 3-year period. The $637,273 amount is composed of $258,000 related to this proceeding, $227,077 related to the rehearing of docket 2017-292-WS, which was the prior rate case, and $152,196, which relate to the unamortized balance of the initial rate case expenses associated with docket number 2017-292-WS. The amount claimed by the company in this proceeding related to the prior case significantly exceeds the commission findings in docket number 2017-292-22 WS. I'm sorry, I think that's an extra 22 in it, so it should read docket number 2017-292-WS in order number 2018-345A. Additionally, the amount associated with the rehearing of the prior rate case exceeds the estimated cost of the rate case, even though the rehearing was limited to a few issues. Therefore, I have adjusted the rate case expenses to remove the amounts associated with the prior rate case expenses. Regulatory expense. Blue Granite has included the cost of the annual filing of the purchased water and purchased wastewater pass-through proceeding as part of its claim in this proceeding. I disagree with the inclusion of these costs in this proceeding. First, it has not yet been established that there would be an annual rate filing for these pass-through costs. Therefore, inclusion of any costs related to the pass-through proceeding is premature at this time. Second, I believe that the cost of the pass-through proceeding should be recovered as part of the rates established in that proceeding rather than being part of base rates. Insurance expense. My review of the company's insurance claim indicates that there are significant increases in the insurance premiums presented by the company. In general, insurance premiums are determined based upon an actuarial process rather than escalations based upon calculated growth rates or inflation escalation. Hence, I'm recommending an adjustment to remove O&M expenses to remove the estimated expense presented by the company. Storm Reserve Fund. Granite is seeking authority to establish a storm reserve fund for extraordinary storm restoration costs beyond those included in the company's revenue requirement. I do not believe I do not believe that the establishment of the storm fund is necessary at this time. The company cites Hurricane Florence in September 2018 as an example of the type of storm where the resulting damage will be covered by such a fund. However, the data showed that this type of storm is not incurred frequently. A monthly surcharge of 53 cents per customer is an unnecessary fee to impose on customers. Voluntary roundup. Granite is seeking authority to implement a voluntary roundup program, which would round up participating customer bills to the nearest higher dollar, with the difference being accumulated in a reserve fund for remittance to the South Carolina Office of Economic Opportunity. The funds will be distributed to community action agencies in the company's service territory to assist low-income customers with their water and sewer bills. The company also seeks approval to defer the implementation costs for the roundup program related to modifications of its billing system. While the consumer advocate is not opposed to a program that aids low-income customers, we are opposed to a deferral of costs that assumes an automatic recovery in the next rate case. Instead, I'm recommending that a cap be placed on the deferral of costs related to modifying the building system and customer service applications. I'm also recommending that the Commission requires the deferred costs to be subject to scrutiny in the company's next rate case. And that concludes my direct summary.
Thank you. Mr. Chairman, with the inclusion of the correction that Mr. Morgan made during his summary, we'd move his pre-file corrected direct testimony into the record as if given orally from the stand.
Mr. Morgan's pre-file corrected direct testimony will be entered into the record as though given orally from the stand.
Thank you, Mr. Chairman. Mr. Morgan, did you cause be prepared 4 exhibits, LKM1 through LKM4?
Yes, I did.
You have changes to those exhibits today?
No, I don't.
Mr. Chairman, we'd move Mr. Morgan's corrected exhibits LKM1 through 4 into the record as the next composite hearing exhibit.
Mr. Morgan's exhibits LKM 1 through 4 will be entered as exhibit number 20.
Mr. Morgan, did you cause be prepared rebuttal testimony consisting of 9 pages?
Yes, I did.
Changes or corrections to your rebuttal?
I have some typos that I would like to correct.
Please publish those.
On page 1 of the rebuttal testimony, on line 17, the sentence that begins on that line says, I indicated. The I in indicated is uppercase. It should be lowercase. On page 3, line 15, there's right about middle of that line, it reads, 2 hurricanes were back. It should read 2 hurricanes that were back to back. On line 7, on page 7, line 15, towards the end of that line, it says customers as creates and it should read customers as they create. On page 8, line 1, I state in there supplier rates for purchase waster. Waster should be changed to water. On that same page, line 2, the sentence ends, recover in ever rate case, and it should read recovered in every rate case. Those are the corrections.
Well, keeping those changes and corrections in mind, if I ask you the same questions today, will your answers be the same?
Yes, they will.
Have you prepared a summary of your testimony, rebuttal testimony?
Yes, I have.
Can you give that at this time?
Yes. In my rebuttal testimony, I respond to the rebuttal testimony of BGWC's witness Dante DiStefano that was filed on February 6, 2020. Storm Reserve Fund. In my direct testimony, I stated that I do not believe that the establishment of a storm reserve fund is necessary at this time. I indicated that given that storm costs are already included in the cost of service, I believe that an adequate allowance for storm cost recovery had been provided. According to BGWC, the purpose of the storm fund is to set aside capital for use when there is an extraordinary level of storm recovery expense and an amount significantly above the annual average normal level of storm-related expense that it typically experiences. However, the company's request to establish a $200,000 storm reserve fund is unreasonable, given that such a level of storm damage does not occur frequently. It is unreasonable to establish a $200,000 reserve because the historical evidence that this basis for the level of cost was incurred due to a one-time unusual experience where there were two hurricanes that were back-to-back in a short span of time. The current process whereby the company seeks deferred accounting treatment is adequate for such occurrences, and there's no need to burden ratepayers with higher rates to create a fund that will end up being unused on the company's balance sheet. Deferred maintenance costs and rate base. In my direct testimony, I indicated that I removed the balances of maintenance work related to the wastewater treatment plant recoating and various hydro tank inspections from rate base. The rationale for my adjustment was that the costs were not capital expenditures, but instead the costs were maintenance expenses. In his rebuttal testimony, Mr. DiStefano acknowledges that these costs are maintenance expenses, which do not recur on an annual basis, but argues that it is appropriate to defer them and include the unamortized balance in rate base. The maintenance costs are not eligible for capitalization under generally accepted accounting principles, GAAP. Even when such costs are allowed to be recovered, utility commissions would normalize these costs to spread the costs out over a reasonable period of time, or a period that benefits from the maintenance expense. The costs are normalized to avoid overstating expenses and establishing rates that are higher than they need to be. Therefore, these costs should not be included in rate base, and the Commission should reject the company's claim. Purchase water and wastewater service pass-through mechanism. In my direct testimony, I indicated that I had concerns related to the pass-through of deferred costs related to purchased water and wastewater services. After reviewing available information in this proceeding, including testimonies from parties, it is apparent to me that since docket number 2015-199-WS, the Commission has pursued a consolidated rate structure policy when setting rates for the company. Hence, consistent with that approach, I believe the company's request to recover costs from all purchased water and purchased wastewater sewer customers is not unreasonable. Also, I believe an annual rate filing pass-through changes the cost of purchased water and wastewater services that will minimize the effect on BGWC's overall rates it charges for current water and wastewater services. To the extent there are any increases in rates for purchased water and wastewater charges, those increases will be passed through in smaller increments that are more palatable to customers if an annual pass-through rate filing is allowed. Deferred purchased water and wastewater service amortization. Mr. DeStefano has misunderstood my explanation for the use of a 5-year amortization period for these costs. It was not my intent to imply that there was a linkage between the purchased water and sewer treatment expenses and the costs associated with the ALC proceeding. Instead, my intent was to use a period similar to one that the company had considered reasonable. It is important to recognize that the company is seeking a nearly 50% increase in its rates. For some customers, this is a huge increase that will put a dent into household budgets. If such a situation did not exist, the company's proposed roundup program would not make sense. Hence, with a 50% increase in rates and a $2.8 million accumulated deferred purchase water and wastewater service costs, the Commission can use its discretion, where possible, to do whatever is reasonable to minimize costs that are passed on to ratepayers. Therefore, I believe the 5-year amortization period that I recommended is reasonable. Pro forma plant additions. In my direct testimony filing, I excluded the cost of the company's pro forma plant additions because these additions were scheduled to be placed in service after the end of the test year and should not be included in rates. Based upon my understanding, the post-test year addition is not eligible for inclusion in rates. Therefore, the adjustment is necessary. And that concludes my rebuttal summary.
Thank you. Mr. Chairman, we would move Mr. Morgan's pre-file surrebuttal testimony into the evidence of this case as if given orally from the stand.
Mr. Morgan's pre-file surrebuttal testimony will be entered into the record as though given orally from the stand.
Thank you, Mr. Chairman. Consumer Affairs' next witness is Aaron Rothschild, and I'd ask you to state your name and business address for the record.
My name is Aaron Rothschild. My business address is 15 Lake Road in Ridgefield, Connecticut, 06877.
By whom are you employed in what capacity?
I'm employed by Rothschild Financial Consulting, and I am the president.
Thank you. Did you cause to be prepared corrected direct testimony consisting of 74 pages?
Yes, I did.
I understand you do have changes to your testimony.
I do have some corrections.
Mr. Chairman, his testimony is lengthy and his corrections are likewise lengthy. If you would permit us, we would like to give the changes to the court reporter, and then my legal assistant, Carrie Sugar, will give a copy to the parties rather than taking the time to publish these voluminous corrections. However the chairman wishes.
Any objections? Okay, we'll do that.
Okay, thank you. Keeping in mind the changes that we know that you have to your corrected direct testimony, if I ask you to change your same questions today, would your answers be the same?
Yes.
Have you prepared a summary of your corrected direct testimony?
Yes, I have.
Please give your summary at this time.
I am testifying on behalf of the South Carolina Department of Consumer Affairs. My direct testimony provides my recommendation to the Public Service Commission of South Carolina Commission regarding the appropriate cost of equity, capital structure, and overall cost of capital for Blue Granite Water Company. I recommend an overall cost of capital, or rate of return, of 7.27% be used to calculate BGWC's revenue requirement and ultimately its consumer rates. My rate of return recommendation is a weighted average cost of the following two components: a cost of equity, ROE, of 8.65% and a cost of debt of 5.73%. The cost weighting is my recommended capital structure of 52.91% and 47.09%. BGWC's witness, Dylan D'Ascendas, recommends 7.86% to 8.12% rate of return. He recommends a 9.75% to 10.25% cost of equity. We recommend the same cost of debt, 5.73%, and capital structure ratios, 52.91% equity and 47.09% debt. Mr. D'Ascendas' rate of return recommendation, if adopted, would require consumers to pay $0.6 or $600,000 to $870,000 more annually than if my recommendation was used to set rates. My rate of return recommendation will allow BGWC to raise capital on reasonable terms while fulfilling their obligation to provide safe and reliable service. Mr. D'Ascendas' 9.75% to 10.25% cost of equity recommendation is above the return expectations published by Charles Schwab, 6.5%, and J.P. Morgan, 7.2%, for the overall U.S. stock market, which includes primarily riskier, unregulated companies. Rate of return principles. My recommendations satisfy the requirements of Hope and Bluefield that regulated utility companies should have an opportunity to earn a return commensurate with returns on investments in other enterprises having corresponding risks. I use current market prices, e.g. stocks, bonds, options, as much as possible because it measures investors' expectations directly, instead of relying solely on historical data and analyst forecasts. My market-based cost of equity recommendation, 8.65%, is superior to a cost of equity recommendation based on historical data, non-market data, because, among other reasons, the cost of equity that BGWC has to pay investors is based on capital markets. Cost of equity in today's financial market. Current capital market data, e.g. high stock prices, low interest rates, low credit spreads, low volatility expectations, high market-to-book ratios, indicates that the cost of equity for utility companies is decreasing, and my 8.65% return on equity for investing in a regulated utility company is sufficient to raise capital. Rates should be set in this proceeding based on the current low cost of capital environment and reevaluated should conditions change in the future. Cost of equity calculations. To arrive at my recommendations, I applied the following three models to a proxy group of 6 publicly traded water companies, referred to as Water Proxy Group. 1, constant growth discounted cash flow model, DCF. 2, non-constant growth DCF model. 3, capital asset pricing model, CAPM. My DCF model is used by financial institutions, JP Morgan Chase, and recommended by leading financial textbooks, Principles of Corporate Finance. My CAPM is based on methodologies used by Value Line, the Chicago Board of Options Exchange, CBOE, and published peer-reviewed academic journals, e.g., the Review of Financial Studies. I use the sustainable growth form of the DCF model, as recommended by leading textbooks, to calculate the cost of equity for regulated utility companies because it is more reliable than mechanically adding an analyst earnings per share growth rate to a dividend yield. The sustainable growth rate maintains the mathematical relationship between earnings, dividends, book value, and stock price, which must be respected. The non-constant growth form of the DCF model determines the return on investment expected by investors based on an estimate of each separate annual cash flow the investor expects to receive. For the purpose of this computation, I've incorporated Value Line's detailed annual forecasts to arrive at the specific non-constant growth expectations that an investor who trusts Value Line would expect. CAPM stands for Capital Asset Pricing Model. The CAPM relates return to risk. Specifically, it relates the expected return on an investment in a security to the risk of investing in that security. The riskier the investment, the greater the expected return, i.e., the cost of equity investors require to make for the investment. Investors in a firm's equity face 2 types of risk. 1, firm-specific risk. 2, market risk. Financial analysts refer to this market risk as systematic risk. Firm-specific risk can be removed by purchasing many stocks, diversification. Market risk cannot be removed by diversification. Market risk is measured by beta. I implemented the CAPM by first determining appropriate values or ranges for each of the 3 model inputs. A, risk-free rate. B, beta. C, equity risk premium. Second, I used the equation above to calculate the cost of equity implied by the model. I used a risk-free rate of 1.55% based on short-term U.S. Treasury bills, 3 months, and long-term U.S. Treasury bonds of 2.39%, 30 years, as of December 31st, 2019. I calculated betas based on investors' expectations, forward-looking, and historical returns by using the same methodologies used by the Chicago Board of Options Exchange, CBOE, and Value Line. The equity risk premium component of my CAPM is based on investor expectations as indicated by the prices of stock options traded on the S&P 500. My response to Mr. D'Ascendis' testimony. Dylan D'Ascendis' final recommendation range of common equity cost rates of 9.75%.
Excuse me, Mr. Rothschild. Is that your server rebuttal, or is that still part of your direct?
This is still part of my direct.
Okay, sorry.
I'll start that sentence over. Dylan D'Ascendis' final recommended range of common equity cost rates of 9.75% to 10.25% overstates the cost of equity. Mr. D'Ascendis applies his 3 cost of equity methods, DCF, RPM, and CAPM to a group of 6 water utility companies, 5 of which are in my water proxy group. He also applies his cost of equity models to a group of 14 non-price regulated companies, non-price regulated proxy group. He includes an upward adjustment of 0.5% to account for his claim that BGWC has greater business risk than the companies in his utility proxy group, non-price regulated proxy group. I found several problems with Mr. D'Ascendis' approach, which I believe results in a proxy group with a significantly different level of total risk than that of the utility proxy group. First of all, the companies in Mr. D'Ascendis' non-price regulated group are exposed to tariff-related expenses, emerging markets, e.g. Mexico, Brazil, among many other risks that BGWC is not exposed to. Second, I found that the companies in Mr. D'Ascendis' non-price regulated proxy group have higher betas and therefore higher cost of equity than water utilities. Since the end of June 2019, the betas of the water utilities average about 0.4 when calculated based on 6-month return data, i.e. considering returns since January 2019 for the June 2000 beta calculations. Over the same time period, the betas of the companies in Mr. D'Ascendis' non-price regulated proxy group averaged over 0.8. Throughout December 2019, investors expected 6 months forward, the beta of Mr. D'Ascendis' non-price regulated group to remain about 20% higher than the utility group in the future. Despite my best efforts, including speaking directly with Value Line, I was unable to reproduce Mr. D'Ascendis' calculations of the residual standard error of the regression and the standard deviation of beta for each reported company in his Schedule DWD-6, page 2 of 3. DCF method. Despite technical flaws, mechanically using 5-year analyst growth forecasts as a growth component of a constant growth method, Mr. D'Ascendis' DCF method currently has relatively reasonable growth rates, and therefore his 8.91% DCF result is relatively close to the market-based cost of equity. Risk premium method. Mr. D'Ascendis applies the following 2 risk premium methods: predictive risk premium model, PRPM, and the total market risk approach. His PRPM is based on research showing that the level of volatility in equity prices and returns can be used to predict future levels of risk premiums. The model inputs include historical returns of the common equity of the companies in his utility proxy group, minus the historical monthly yield on long-term U.S. Treasury securities through July 2019. Mr. D'Ascendis' RPM results are too high, above rates indicated by market data, primarily because his overall market result expectations are above investors' expectations. The market expects less than a 32% probability of the growth in the S&P 500 will provide a market return of 10.55%. Market data indicates that the investors expect the market returns of 11.62% and 14.52%, as proposed by Mr. D'Ascendis, will also have less than a 32% chance of occurring. Therefore, Mr. D'Ascendis' RPM results are unreliable and significantly overstate BGWC's cost of equity. CAPM. I do not agree with the results of either Mr. D'Ascendis' CAPM analysis because I believe that they overstate the company's cost of equity. The arithmetic average return, 11.89% for large company stocks between 1926 and 2018, that Mr. D'Ascendis uses overstate the historical risk premium investors actually earned. Investors actually earned a compounded annual return of 10% between 1926 and 2018. The arithmetic mean return of 11.8% he uses to calculate the cost of equity is possibly valuable to stockbrokers and fund managers attempting to predict future bonuses, but not for calculating the cost of equity. The Dow Jones Newswire article stated, "Some financial advisors rely too heavily on a formula known as the arithmetic average, which can be misleading when investing for the long term. Financial advisors who use this formula may be overstating your potential profit and leading you to take risks you might otherwise avoid." As discussed in Section 5E of my direct testimony, stock options traded on the S&P 500 indicate that a market risk premium of between 8 and 9% is conservatively high. The market expects less than a 32% probability of growth in the S&P 500 that would result in a risk premium of between 8 and 9%. Investors expect a growth rate equivalent to a 10.03% market risk premium to be even more unlikely. Therefore, Mr. DeAscendis' CAPM results are unreliable and significantly overstate BGWC's cost of equity based on market data. Risk adjustment. Mr. DeAscendis' 0.5% premium adder for the small size of BGWCs relative to the average capitalization of the water proxy group is not justifiable. Mr. DeAscendis states that, quote, "size has a bearing on business risk," close quote, because they are, quote, "less able to cope with significant events that affect sales, revenues, and earnings." Mr. DeAscendis' recommendation that BGWC's cost of equity should be increased by 0.5% to account for its size is likely excessive. With that said, my 8.65% cost of equity recommendation is on the high end of results to account for the possibility that BGWC small size impacts the return expectations required by investors and their market-based cost of equity. Conclusion. Based on the evidence presented in my testimony, I conclude that the cost of equity allowed for the company should be 8.65% with an overall cost of capital of 7.27%. See Table 1. My recommendation satisfies the requirements of Hope and Bluefield that regulated utility companies should have an opportunity to earn a return commensurate with returns on investments in other enterprises having corresponding risks. Mr. DeAscendis' cost of equity recommendation of 9.75 to 10.25% is unreasonably high, primarily because it is based in part on model results applied to a group of 14 companies, non-price regulated proxy group, that are riskier than water utilities. His constant growth DCF model produces a result of 8.91%, which is on the high side of reasonable. My 8.65% cost of equity and an overall cost of capital rate of return of 7.27% should be adopted because it will allow BGWC to raise capital on reasonable terms while fulfilling their obligation to provide safe and reliable service.
Thank you. Mr. Chairman, we'd move Mr. Rothschild's pre-file corrected direct testimony into the record as if given orally from the stand.
Mr. Chairman, may I ask a quick question? Without having seen the corrections, may I just confirm with Mr. Witt that the corrections are just Scrivener's errors?
They're just, normal corrections. There's no material changes to it.
Is that okay with everybody? Okay, Mr. Rothschild's corrected, pre-filed direct testimony will be entered into the record as though given orally from the stand with the corrections that will be given to the court reporter. Yes, sir, Mr. Ellaby.
It would be helpful if we could have a listing of the corrections at the time when y'all send that around. Or a red line version is Mr. Rothschild? Maybe there was a red line?
I think we have a list of the corrections.
Okay, great. Thank you.
Okay, thank you.
Mr. Rothschild, did you cause be prepared exhibits ALR 1, 1B, 2, 4, and 5 to your corrected direct testimony?
Yes, I did.
And Mr. Chairman, we had another little little change on that too now. We found just before the hearing that 2 of his exhibits were not complete. And so we talked to your court reporter, Ms. Wheat, and showed her we filed updated exhibits. We only changed where the exhibits were complete, considering the first one was filed and the second. We also answered the parties' questions about that. There was no changes. They were just updated. And so we'd like to move the updated, corrected exhibits into the record. And if any of the parties have questions, as Mr. Ellerby apparently does.
Did Mr. DeSantis, who I asked be excused, does he know about these changes, Mr. Rothschild? Did you discuss those with him?
They were E5. There's really not a change.
Oh, okay. I thought the exhibits were incomplete and now they're complete.
Let me tell you what happened. When the first exhibits were filed, then we corrected them and everybody received the corrections. On 2 of the exhibits, instead of getting the corrections and the original, they only got the corrected text. So we refiled to have both together. There's no change. This is complete for your convenience.
So we've seen everything that's going in the record. Thank you.
Yeah, they are in the DMS. So, okay. So,
we'd like to move the updated, corrected exhibits.
Updated, corrected ALR 1 through 5 will be exhibit number 21.
And for everybody's convenience, there was not an ALR 3, that was skipped. Okay.
Without ALR 3.
Mr. Rothschild, did you prepare or cause me prepared to serve rebuttal testimony consisting of 24 pages?
Yes.
Do you have changes or corrections to that testimony?
Yes.
Or is it in your other?
It's in the list.
Okay, okay. Yeah. Well, keeping those changes in mind, and like I said, we'll be glad to share them with anybody. If I asked you the questions today, will your answers be the same?
Yes.
Okay. Have you prepared a summary of your servable testimony?
Yes, I have.
Can you please read it at this time?
Yes. Introduction. I'm testifying on behalf of the South Carolina Department of Consumer Affairs. The purpose of my rebuttal testimony is to respond to issues addressed in BGWC witness Dylan DeSantis' rebuttal testimony. His criticisms of my cost of equity models, e.g. DCF, CAPM, among other topics, are invalid and should be rejected. If adopted, my rate of return recommendation would allow BGWC to raise the capital it needs to provide safe and reliable service because my recommendations are consistent with investors' expectations. Definition of the cost of equity. Mr. DeSantis claims that I do not believe the cost of equity should be based on expected market conditions. He is mistaken. As discussed throughout my direct testimony, my cost of equity recommendation is based on the forecasts represented in market prices and a direct measurement of investors' expectations. The cost of equity should be based on investor expectations, including what they expect market conditions will be in the future. Application of DCF model. Mr. DeSantis claims that my application of the constant growth DCF is flawed because I relied on the sustainable growth methodology. I will respond to 4 of his specific criticisms. Number 1, relies on short-term security analyst forecasts. Mr. DeSantis claims that I rely on short-term forecasts that are no longer than the ones he uses in his DCF analysis. My DCF growth component is different and superior to the one used by Mr. DeSantis because I use these short-term analyst forecasts as a starting point to derive a sustainable long-term growth rate. 2, growth methodology is circular. Mr. DeSantis claims that my DCF method is circular because the result, if authorized, would become one of the model inputs. His claim is false because, among other reasons, my DCF results are based on companies in other jurisdictions. There is no circularity. 3. Mr. D'Ascendas claims I ignore the basic principles of rate of return, of rate-based rate of return regulation. Applying a market-based cost of equity to book value, as I have done, is consistent with original cost rate making. 4. External financing growth rate. Mr. D'Ascendas misinterprets my exhibit. As indicated, I use the average growth rate of the companies in my proxy group as my external financing growth rate, 0.63%. Application of CAP-M. Mr. D'Ascendas also claims that my application of the CAP-M is flawed. I will again respond to his specific criticisms. Number 1, risk-free rate. Mr. D'Ascendas claims that market yields should not be used. Mr. D'Ascendas claims that the market yields on bonds should not be used as the risk-free rate in the CAP-M because, open quote, rate making and the cost of capital are prospective in nature, i.e. forward-looking, close quote. His claim is false because market yields on bonds are the result of investors' expectations of future interest rates. Number 2, option implied beta. First, Mr. D'Ascendas implies option implied betas are only useful when, open quote, companies are undergoing fundamental change, close quote. This is incorrect because option implied betas reveal investor expectations in general, including when investors do not expect fundamental change. Using betas based on historical returns, as Mr. D'Ascendas does, is driving a car while looking through the rear view mirror. Second, Mr. D'Ascendas' claim that option implied betas are not reliable for companies with historical betas that are far from unity contradicts the conclusions of the paper I cited in my direct testimony. Third, while liquidity is definitely an important issue in dealing with options and should always be carefully monitored, Mr. D'Ascendas' claim that based on my work papers, open quote, the average proxy group company had 13 call options and 9 put options traded throughout his options implied beta calculation, close quote. This is incorrect. The numbers he is referring to represent the average number of strike prices, not the number of individual option contracts. Fourth, Mr. D'Ascendas' claim that the authors do not endorse the use of option implied betas as calculated by me for cost of capital purposes is incorrect. The authors do not state that a 6-month option implied beta may not or should not be used for cost of capital purposes, and ultimately it is up to each field to refine the best way to use them. Market risk premium, MRP. Mr. D'Ascendas' claim that the MRP computation of my CAP-M contradicts my direct testimony because it involves forecasting markets is not true. I do not attempt to forecast markets. My MRP is based on a direct measure of investors' expectations as indicated by stock option prices. Failure to use ECAP-M. I chose to not implement the ECAP-M because evidence supporting its use is inconclusive. Current market environment. Number 1, stocks are expensive, high price to earnings ratios. Mr. D'Ascendas' claim that higher PE ratios do not indicate a higher cost of equity between 2017 and 2020 for water utilities. I agree that higher PE ratios do not necessarily mean a higher cost of equity, and this is why I use cost of equity models instead of just using PE ratios. 2, Mr. D'Ascendas claims that rates in this proceeding should be set based on future interest rates, not current interest rates. I agree with Mr. D'Ascendas that, open quote, rate making and the cost of capital are prospective in nature, i.e. forward-looking, close quote. I do not agree that using economic forecasts is the way to measure future interest rates, however. I use market yields on bonds because they are a direct measure of investor expectations. Number 3, current volatility expectations are low. Mr. D'Ascendes claims that the VIX is irrelevant to the cost of equity because it is only based on 30-day expectations. I present the VIX because it is the most commonly cited indication of investors' expected volatility. Mr. D'Ascendes' comments are not valid because I use longer-term volatility expectations, 1 year, in my cost of equity calculations. Conclusion. Mr. D'Ascendes' criticisms of my direct testimony are unsupported and should be rejected. If adopted, my cost recommendations would allow BGWC to raise the capital it needs to provide safe and reliable service because my recommendations are consistent with investors' return expectations.
Thank you. Mr. Chairman, we would move Mr. Rothschild's pre-file servability testimony.
We can't hear, they can't hear you. You need to get in front of that microphone.
We would move Mr. Rothschild's pre-filed servability testimony into the record as if given orally from the stand.
Mr. Rothschild's pre-filed servability testimony will be entered into the record as though given orally from the stand.
Thank you, Mr. Chairman. These witnesses are available for questions from the commission or the other parties.
Okay, we're going to need to take a break, so we've got, and I'm assuming we can get Mr. Mirzwa back on video when we get back. We'll reestablish that connection. We want to remind Mr. Ellerman, you got something?
I was just going to ask if the company could be allowed to do the cross-examination of the panel last, just in the event there's any friendly cross.
Okay, got you.
I've got scars.
That's fine. I understand. So want to remind all of you gentlemen that are witnesses that you remain under oath, so that you shouldn't be talking to other folks about your testimony during the lunch period. We have a commission meeting that is going to start at 2 o'clock. Also in here, we should be done with that hopefully in about 30 minutes. So somewhere in the range of 2:30, we will begin this hearing again. So with that, we're adjourned.